Hi, I am Abhijeet Bora. Today I will be doing analysis of the Union budget which was presented by FM yesterday. So the budget, there are few focus areas. Firstly, it is very clear that the government is quite keen on fiscal prudence. It is very visible that the fiscal deficit target for FY25 has been set at much lower than what market was expecting and lower also than the previous interim budget estimates. So the fiscal deficit at 4.9% is quite positive versus the expectation of 5.1%. Even for FY26, the targets are quite encouraging at 4.5% for fiscal deficit as a percentage of GDP. Second is that the government has maintained the Capex expenditure plan for FY25 at 11.1 lakh crore, which is a significant growth of 17% on a YOY basis. So that will help the economic growth in FY25 and going forward also. The second focus area has been on the development of the human capital. They have laid down various schemes for the development of the skilled labor and the job creation. The third focal point has been the revival in the domestic consumption and the revival of the rural economy. That bodes well for overall economic growth as well. And housing has been also a focus area, and there has been renewed focus on the urban housing plans which will help the housing finance companies. So these are the key focus area by the government to follow the growth path and maintain the fiscal discipline. Apart from this, there has been some special packages for states like Bihar and Andhra Pradesh. Where Bihar, they are focusing more on development of highways. They have allocated almost 26,000 crore rupees. They also will be developing new hospitals, sports infrastructure, medical colleges. So these focal area will be there for the overall development of the Bihar. So the government has also given a special financial assistance of around 15,000 crore for this fiscal year for Andhra Pradesh, and this amount will increase going forward. So the government has very cleanly focused on these two states where development is a agenda for the government. There has been some tweaking on the personal taxation front, which will benefit the individual taxpayers with an incremental income of 17,500 in the hands, and that's bode well for the consumption story of India. However, the increase in the capital gain tax on more short term and as well as long term to 20% for the short term and 12.5% for the long term is a near term sentimental negative for the broader equity markets, and that was reflected in a knee jerk reaction in the market yesterday, though it recovered very sharply post that. The key budget beneficiaries are ITC Titan, NTPC Bail in the power side. In the housing finance companies, Awas and PNB Housing Finance would be the key beneficiaries. On the consumption side, Zomato would do well, and Tejas Network in the telecom side. SBI in the banking side are the key beneficiaries. On the negative side, Dixon Technologies will be impacted because of the lower duties on the mobile phones, and the gold finance companies like Muthoot Finance and Manappuram Finance will be impacted. So these will be key negatives from the budget from this stock perspective.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.